YouTube, we are back with another lesson. Now today I want to deep dive into my strategy a little bit more. I always talk about having no stop loss, dollar cost averaging, why I love dollar cost averaging, and how it's helped my trading tremendously. But I want to talk about the cons of that today. Some people forget that no matter what it is, there's always bitter with the sweet. Some people just think it's just marshmallows and butterflies and roses, but that's just not the case. There are pros and cons to every strategy. Every single strategy. I don't care what it is. So today I want to go over the cons of being a dollar cost averaging trader, or for me, I like to call myself a short-term currency investor. That way whoever is watching this video can find out if this is the right strategy for them or not. Because just because someone else does it doesn't mean that you have to do it. But without further ado, man, let's get into this video and see if this strategy is a right fit for you. Let's go. So before I start talking about these cons of being a dollar cost averaging trader or a short-term currency investor, I just want everybody to know I dedicate my profitability to being a dollar cost averaging trader. If it wasn't for dollar cost averaging, I wouldn't even be where I'm at today. I would not be able to profit the way I have in the past year. I would not have been profitable if it wasn't for this strategy. So I just want that to be clear. But, big but, there are cons. Cons that a lot of people cannot handle. And the first con I want to go over is patience. Yes, patience. But here's the thing. I'm not talking about no hour patience. I'm not talking about 1 day patience. I'm talking about 2 weeks, 4 weeks, 6 weeks. Matter of fact, let me show you guys something. Let me show you the true cons of dollar cost averaging trading. This is a position I'm in, Swiss yen, which, by the way, I advise to not trade with yens if you are a dollar cost averaging trader. Even I know this, yet I still thought I had a good setup at the time, so I took the trade, but that's on me for being undisciplined. And now because I got myself in it, I gotta get myself out of it. This is Swiss yen. Look how long I've held this trade. I've been holding this trade since March 30th. I have been holding this trade since March 30th. Yes. And you know, some people might think it's stupid. You should have just cut your loss a while ago. But no, I'm not cutting anything. You can lose your money. I'ma be chilling with mine. But this trade alone, I have been holding for April, May. I've been holding this for 2 months and some change now. 2 months and some change. This is gonna be a 3-month trade. This will for sure, I'm positive I'll be holding this trade for over 3 months. Might even be 4 months. But the thing is, this is one of the cons of being a dollar cost averaging trader. When you get in certain positions, sometimes they can take a minute to hit. But if you're trading appropriately, you know what you're doing, you can win bigger from the deeper drawdown you go. So the deeper the drawdown, the bigger the profit if you do it the right way. Now this trade, listen, this trade, I guarantee you, I'm going to win. Or worst case, I will close this trade at a break even. Not to mention, I am hedging myself with other trades. So when I close profits, I will trim off some of my first initial positions, which were like way down here, to bring my average cost up. I will be trimming out of this, but not to get too deep into this trade, but this is a deep con that most people cannot handle. Going thousands of dollars in drawdown on one trade, holding it for months. It can suck the life out of you. It can suck the hope out of you. Some people do not have that type of patience. If you do not have patience, if you cannot keep yourself calm and composed for a long enough period of time for your trade to hit, then you cannot do this strategy. Next, now this correlates directly with the first point, and that's the emotional and psychological drain. Most people cannot handle the emotional and psychological drain that comes with handling deep drawdowns. You gotta understand, when you are dollar cost averaging, drawdown is a part of the game. You need to learn to become friends with drawdown, become close with drawdown. You need to appreciate the drawdown for what it is. The drawdown is the bitter with the sweet of this strategy. I've been holding this trade for not quite a month, but almost a month, and look, it's came all the way against me. I've been holding the whole way back to the upside. Most people would not be able to handle that psychological drawdown. And keep in mind, I was down almost about $1,000 on this trade in drawdown. But because I control my risk very appropriately, very tight, that $1,000 was not anything. It wasn't anything. To keep it simple, that wasn't much of my account at all, and I'm completely fine with that. That's something you gotta be okay with, which is why when you're trading appropriately, this emotional psychological drain shouldn't even be a thing. And this is why I also emphasize meditation, making sure you're calm, composed, make sure you're doing your breath work. Your mind has to be on point at all times. As being a full-time trader or a full-time short-term currency investor like myself, you need to have a peak mental at all times. I'm talking about meditation. I'm talking about eating right. I'm talking about drinking your water. I'm talking about hitting the gym. You need to do all these things because these things all help your brain perform better. So when you're on the charts, you can be your best self. This game is more than just charts. This is a game against yourself. So you need to understand this. If you don't understand this, I can probably assume that you're not a profitable trader yet. I already know because that was me. It takes time. It takes a lot of mental development because this emotional psychological drain is real. It's real. So this is a con of the strategy if you do not know how to handle yourself. So keep that in mind. If you know this can be you and you're prone to this stuff, this strategy is not for you. 3, something a lot of people will not like again is becoming an economist. Yes. You have to become almost not a literal economist, but you need to be somewhat an economist. You know why? Because you cannot be an idiot. Yes, an idiot, a goofy, a bot, adding when there's bad news coming against you and you're just adding mindlessly. You can't do that. For example, when this trade was going against me for a small period, I knew Australian dollar wasn't looking so good and Canadian dollar has been getting some great fundamental news lately, back to back. So that means I hold my small positions into a deeper drawdown until I can get that reversal that I desire. So yes, I am eyeing economic news every single day. Shout out to the Edge Finder. The Edge Finder is a software I use to look at all my setups in all my economic data in one spot. So if I go here, I can literally look at all my economic heat maps. For example, US economic heat map. I can see everything. I can see my GDP growth, my manufacturing PMIs, services PMIs, retail sales, CPI, PPI, PCE, wage growth, etc., etc., etc. And I can get an overall impact that all the fundamental news is having on the dollar. But I'm not going to get too deep into it. I just want to give a shout out to the software that I use because they help me keep an eye on fundamentals at all times. I see everything. I'm like a hawk in the sky, seeing what's going on. If I like something, I add to it. If I don't like it, I do not add to it. That's why it's essential that you use small lot sizes. Small lot sizes. Which will lead me into my next con. Slow money. Oh, a lot of people not gonna like that. Trading slow money? What the? Trading and slow money doesn't even go into the same sentence for most people. They need fast, quick money. People are brainwashed from listening to gurus and looking at people in their fake Lamborghinis, thinking trading is this quick money to where you become a millionaire in a day. Well, I'm sorry to tell you, buddy, you won't become a millionaire in a day. Shoot, you won't even hit your first 6 figures in a day. It all takes time. Matter of fact, it's probably gonna take you a year just to make your first $1,000. Not even a year, 5 years. It's gonna take you time. I've been trading for over 4 years now. So, I mean, over 4 years, a year profitable, like literally consistently profitable, not trading wins and losses, it takes time. I wish I would have known how much time it actually takes to really dive deep into these charts. But yes, slow money. So if you know you cannot handle making slow money and slowly growing your account over time until you can get those big wins, well, unfortunately, this is not the strategy for you. Not only is this not the strategy for you, but there is no strategy for you because you ain't supposed to be trading. You want quick money, man, you just go join the scammers, man, because we not scammers. We're trading legitly. We're trading the right way. So yes, the money will not always be fast. And lastly, but not least, even though we kind of already covered this, it's the stomach for drawdown. You must have a stomach for drawdown. You cannot be a little pee-wee little, oh my God, I'm down $1,000. No, like I said, drawdown is normal. Embrace the drawdown. Become friends with the drawdown because you will see a lot of it. Even when you have a good direction on where you want the charts to go. You have a good direction on where the charts might go. You've done your fundamental analysis. You've seen what the institutions did. I looked at the Commitment of Traders data report. I see what the CTFC reports. And the trades still ain't going my direction. That's fine because trades do not reverse immediately. So yes, that's why I dollar cost average. So it might go against you for some time before you finally get that good, beautiful reversal that you've been waiting for. But that will involve drawdown. And while you're in that drawdown, you will be slowly accumulating positions. Then when you get that push in your direction, you get even more profit. But to get more profit, you gotta have the stomach for drawdown. You cannot be afraid of drawdown. You cannot be afraid of negative numbers. And just before I even end this video, I want to show you guys my current drawdown right now. I'm gonna go in my journal. I'm gonna post a screenshot in my journal so you guys can see what drawdown I'm in. Since I'm doing all this talking, right? Let's see how much drawdown I'm in. I'm logging into my forex.com account right now, and I'm going to show you guys in my journal. So I'm screenshotting it right now. Screenshot. I'm going in my Discord. I'm going in my Discord and I'm posting it in my journal. And now I'm about to show you guys. Here it is. And as you guys can see, as you guys can see, Aussie CAD, we're down $171. That's nothing. Swiss yen, you see how much drawdown we in? You see how much drawdown we in? I'm only down $1,500. $1,500, that's nothing. That's nothing. I'm ready to take on a lot more drawdown if I have to. And I'm keeping an eye on economic data at that too. So I'm ready to pull the trigger when I got a green light. Give me the green light, I'm gonna pull the trigger. Euro Aussie, we're down $147. That's nothing. Euro GBP, we're down $393. This actually makes me a little bit disappointed because I was just up $200 when I went to sleep last night on Euro GBP. But there was some bad news. Same with pound USD. We got some bad pound news, some pound economic news. So therefore, it didn't pushed against me. They all pushed against me. And even if I go into forexfactory.com, this is what I use for YouTube because most people don't have the software that I use. We can see, look at the earnings index. It came down to 5.3%, worse than expected. And then we also had a climate count change, not good. More people falling for unemployment, it seems. And that's way above expected too. 33.1 over 9.5 expectations. I mean, it's obvious why I literally see why the pair is going against me. And now because I see this, right? I'm in Euro GBP sales. I'm getting off topic a little bit. But because I see this, right? It's shot against me. Do you think I'm going to add? I'm not going to add, at least not yet. At least not yet. But depending how the euro looks, if we get weak euro news or we get a clapback with the pound, then I may continue to add. Because I know overall, I'm still bearish on the euro and bullish on the pound. So if I am to add to this, I will probably wait for a deeper push to either this zone or this zone up here. One of these zones I will be adding, depending how everything is looking. There's more economic data coming out, so depending how the economic data looks, I will look to add. But right now, right after that news release, no. You gotta be a fool, man. Which is why I say one of the cons of this strategy is being an economist, eyeing economic data, which I think you should be doing as a short-term or long-term trader anyways, in my opinion. But that's another topic for another day, man. So that is all for you, ladies and gentlemen. If you appreciated the lesson, make sure you hit the like button down below for me. Hit the sub button if you haven't already. I appreciate everybody for watching. I hope you got some good personal insight to where if you should be a dollar cost averaging trader or if you should go do something else, because dollar cost averaging is not meant for everybody. I'll tell you that right now. Most people will fold being a dollar cost averaging trader, or most people will blow their accounts. So if you're that person, use a stop loss and, find something else. But if you can see the cons and feel like you're okay with these cons, I highly, highly, highly advise that you do go down this route and take this strategy upon yourself. And now if anyone's asking, well, what are the pros of this strategy? Well, we'll say that for next episode, man. So with all that being said, y'all, I appreciate y'all. Make sure I hit that like button like I said, and I'm gonna catch you guys in the next lesson. Let's go.